What is going on, traders? Welcome back to the Traveling Trader. In this video, we will be discussing NIO and Palantir. We're going to move away from the penny stocks just a bit, but if you haven't seen my latest penny stock videos, go ahead and check them out. The last 3 or 4 videos I made were about penny stocks. We bought Sundial, which is going absolutely crazy, might hit $4 this week. We talked about AITX, ASTI, Alpine 4 Technologies, all going crazy. If you want access to all of our trades, link is in the description below. But for this video, we're going to be focusing on NIO's earnings and Palantir's earnings. NIO's earnings are actually coming up next month on March 9th, but there's a reason why I want to talk about it today. And it's because I think that we will see some pre-earnings activity leading up to NIO's earnings on March 9th. Palantir's earnings so far are on February 16th, so much more imminent. We're talking about next week, and I will tell you how I'm trading both of these and give you some stocks as well as some detailed options trade ideas and show you how to trade this. But before I get into it, if you get anything out of this video, leave it a big fat thumbs up just like this. Leave it in the comment section below. Let me know if you got anything out of this, which one of these stocks you're playing, how you're playing them. And if the option strategies that I talk about seem a bit complicated, I do try to simplify things for you, but I also have an options course coming out. It's a full A to Z options course coming out later this month. So sign up for early bird access. I'm still allowing anybody who's on that list to get a pretty significant discount on the course. So if you're on the list, you get a discount, no questions asked. That link will be in the pinned comments below, not the description, but the pinned comments. So go look for it and sign up if you want to take advantage of a very comprehensive and, in my view, reasonably priced course. Without further ado, let's get right into it. So what am I expecting from NIO leading up to earnings? Well, earnings are March 9th as I said, earnings are March 9th. But why am I talking about them now? Well, it's because momentum stocks, a lot of times after they run hot for so long and they are forming this continuation pattern, and a continuation pattern just means that the stock is bouncing along range bound, right? Either in a channel or a wedge or a triangle. But either way, it's moving along more or less sideways, and it's waiting for the next leg up to continue the trend that it was on. And obviously NIO is on a violently massive uptrend ever since 2019. So I am expecting NIO to continue upwards, and it will likely do this before earnings as it has done the last 3 or 4 earnings. Also, if you take a look at NIO's delivery numbers, and NIO exposes its delivery numbers just like Tesla well ahead of earnings, and they quadrupled their deliveries that they set in January 2020. They quadrupled them for January 2021. So we're already expecting their delivery numbers to knock it out of the park because they reported those. China's car sales increased 25% in January. Obviously, this is a coronavirus comeback story, which is great. And NIO just received a $70 price target, or price hike, I guess, from Deutsche Bank. And if you know the history of these EVs, Tesla and NIO specifically, they never not hit those price targets. Sorry for the double negative, but they never not hit those price targets. So I do expect NIO to hit $70, and I do expect it to happen before earnings leading up to earnings. Now, here is what is telling me that. Let's take a look at NIO's options data. So if we look at NIO's open interest, and you'll see that there are a ton of contracts leading up to earnings. Remember, I said earnings were March 9th. So after March 9th, if you look at the open interest here, you'll see that there's a drop off from February 26th, where we have 15,000 in open interest, 11,000 contracts in open interest March 5th, and then it drops right after that to 4,000. But more importantly, how are traders trading these expiry dates? So let's take a look at the interest for February 26th as this thing will load. And you could see that the contracts are overly bullish. Look how much open interest change there is in the calls, right? All of the action virtually is happening on the call side and not on the put side. And if we take a look at the strike prices, 67, 68, 69, all the way up until $90. Now, I don't think that NIO hits $90 before this earnings, but it just goes to show you that traders are buying these out of the money contracts, which sometimes are called lottos, in hopes of making money from a violent and drastic upward move before earnings. Same thing with March 5th. which is the last expiration before earnings. You see all of this open interest change here. So we got the delivery numbers, we got the price target, and I've said this before, but NIO currently is at a point of no return, meaning that once a company, a growing company, hits a certain threshold and they become ingrained in the marketplace. So let's just say that NIO, for instance, right now is in a spot where it can't afford its operations no longer. It will no doubt be acquired by a company, or maybe the Chinese government will swoop in once again, but it's too big to fail is what I'm saying. And NIO is definitely at that point now. It was not at that point last year. And going back to the chart, well, how am I trading NIO? Because NIO had a little bit of a down day today, you can see the big discount in calls here. So what I would actually do in this case is I might go out to an expiration that's further than earnings just to buy us a little more room, and maybe buy a 0.4, 0.5 delta call. Now, what does delta mean for all of you newbies? Well, in really short terms, or in a summarized manner, delta means that for every dollar that the stock goes up, that option will increase by that amount. So if a 0.5 delta means that it will move at half the pace of the stock. If the stock goes up by $1, that option will go up by 50 cents. So it captures half of the move of the stock. And you can buy maybe like the $65 call, which is discounted. It dropped almost 13% today, expiring March 26th. We can buy that for about $695. So I would definitely aim for something like a play like this. If you wanted to reduce your cost basis, you could also buy a call vertical, in which case I would pick a shorter expiry because we don't need to be significantly right in the same manner that we do when buying just a single call. So maybe I would go out to March 5th before earnings. And in this case, you could buy, let's just see what the 61.62 call vertical will give us in terms of pricing. So if we do 61.62 call vertical on NIO, we can actually buy this for 40 cents. Obviously, you have to multiply it by 100 because when we're dealing with options, each option controls 100 shares. So for $40, we can buy this. Now, what is our max profit? Our max profit is going to be $60. So we're spending 40 to potentially gain 60. How did I get $60 so quick? Well, because I know that the max value of this vertical spread is the distance between the strikes. In this case, we're buying the 61.62 call spread. So the max value that this can ever be is $1 minus what we paid for it is 40 cents. So what's left over is 60 cents or $60 per contract. So this is actually a very low risk way of playing NIO's earnings. And I would feel very comfortable buying this tomorrow or whenever you see this video, if the market conditions are still the same and the price of these options are still the same. And then from a stock perspective, in this case, it's just a no-brainer. I would just continue to dollar cost average into NIO. And I might buy in a little heavier now than I usually would because of the earnings coming up on March 9th. But in this case, you could buy NIO at $61. If it drops to the 50-day moving average at around 52, you could buy some more. But essentially, I am expecting NIO to rise towards earnings or on earnings. All right, stock number 2. Let's talk about how we're going to be trading Palantir earnings. Again, Palantir earnings are February 16th, but there is a very interesting caveat here because remember that Palantir has an impending lockup expiration. What does that mean? Well, it wasn't that long ago that Palantir IPO'd. It was in October of 2020. So the original investors get to sell their shares on the open market. When can they do that? They can do that 3 days after Palantir reports earnings. Remember, it reports earnings on the 16th, so it can do so 3 business days after that date. Now, the reason that this is significant is because we want to be aware of that when we're setting up our trades. I definitely don't want to be holding Palantir on lockup expiration day because I expect a lot of shares to hit the market. The original investors that got in at $10 or below that, they're going to want to take profits. Some of them are going to want to take profits, especially that Palantir has now 3 to 4x. So I don't want to be bag holding when investors are dumping their shares on the market. So we want to be aware of that when we're coming up with our trade strategy for Palantir. Now, from a fundamental perspective, Palantir recently partnered with IBM on a project that will merge hybrid cloud, artificial intelligence, data processing, and operational technology into a new product. Basically, IBM has been trying to be that 4th player or that 5th player in the cloud game, along with the likes of Microsoft Azure Amazon AWS, Google Cloud, etc. So IBM wants to transform their whole business infrastructure to be cloud-based, and now they're looking to recruit a company like Palantir to help them do it. And this, as a matter of fact, boosted Palantir's stock price. It was sleeping around the mid 20s, and it shot all the way up to above $45. It has since come back to earth. So how am I going to be trading Palantir leading up to earnings? Well, this is what I'm going to do. There is a few lucrative strategies here in my view. One of them is the tried and true iron condor. So I looked this up earlier, and you can essentially sell an iron condor for the expiration after earnings. We could sell an iron condor that creates a range basically between $31 and $47. So if we take a look at this on a graph, you'll see that it creates this range here. And if Palantir expires anywhere within this range, then we get 100% of our profits. What is 100% of our profits? In this case, we could sell this iron condor for 42 cents, or remember, multiply by $142. What is our max loss? Our max loss would be $1 minus 42 cents. Just like a vertical spread, the width between either side of the iron condor, because they are equal in distance, right? The calls are 47.48, the puts are 31.30. So on either side, the max width between the spreads is $1. That means the max value of this iron condor is $1 minus the credit that we receive, 42. So you come up with 58 cents. That is your max loss. So our max profit is 42 cents, our max loss is 58 cents, and your max loss would be incurred if it falls either above $48 or below $30. So that to me is a comfortable range for Palantir. Now, why is it a comfortable range? Because the way that you would calculate an expected move, meaning how far you expect Palantir to move in either direction, old school investors, or old school options traders, I should say, the way that they do it is they take the value of the at the money straddle. And if you look at the at the money straddle, this would be Palantir currently is trading at around $36. So if we take $36 and we try to buy the straddle, you'll see that it will cost us $7.38. Now, I'm not going to go into what a straddle is. You can look that up on your own. But basically, we use a straddle to also try and determine the move that Palantir will make by this expiration date. So in this case, we can expect Palantir to make a plus or minus $7 move. Now, with that iron condor, I did have the 31.30 put spread, meaning that if Palantir finished below 30, then we would incur max loss. So in that case, we wouldn't be protected, right? If the expected move is $7, that would be, it would blow past our range if it did in fact move $7. So you could, if you really wanted to, give yourself a little more cushion on the put side, but I'm a little more bullish on Palantir leading up to earnings. So I don't mind taking the extra risk in order to collect more credit. But you could knock this down to, say, the 30.29 put spread if you wanted to, but you would just collect a little bit less credit. Now, another thing you could do with Palantir is sell a cash secured put. You could see that because Palantir dropped almost 7% today, the value of puts shot up, because the relationship between puts and stock price, when the stock price goes down, the value of puts go up. Right. So in this case, what I would do is I would go further out. Maybe let's check the April-May timeframe and see what we can sell. Yes, in this case, the value of puts have, they're giving us some juicy premiums here. So you can, as a matter of fact, sell something like the $35 put for $765. Now, what does that mean? That means that if Palantir hits $35, you will be assigned and you'll be forced to buy 100 shares of Palantir at $35. But there is a very important detail here. We got paid $765 for the put, so it wouldn't be $35. You collected $765 per share for the put, so your cost basis would actually be $27.35, which most people would kill for now to buy Palantir at. And if Palantir never hits $35, then you get to keep that $765, no questions asked. So I do love the cash secured put here. I did a whole video on cash secured puts. I will link it up here, but I do love that strategy for Palantir. Now, in terms of buying the stock, I actually don't like that play here, because I think that Palantir, like I said, the lockup expiration is coming up, and that is something that I'm very wary about. So I don't want to be caught bag holding when potentially millions of shares will hit the market. So if you don't own Palantir right now, what I would do is I would wait for a major retracement after earnings and then buy into that weakness if and when we do see it. And if we don't, then you could just dollar cost average. You have nothing to lose because you can start dollar cost averaging now, but there is a chance that we do see a drop in Palantir. So you're better off waiting, especially if you're going to be dollar cost averaging anyway. Maybe you could start at a lower price. And if not, then you can always dollar cost average into Palantir at whatever price it is after the lockup expiration. Anyway, traders, that is it for this video. I hope you guys learned something. If you did, leave it a big fat thumbs up. Again, sign up to the options course. It is the first comment below. You will get early bird access. Anybody on that list gets a discount on the course. It's a full course from A to Z. Sign up if you want access to our trade alerts where I send out all of my penny stocks, options, long-term holds, etc. Link is in the description below. Subscribe to the channel, hit that notification bell. Stay safe out there, traders. Peace.